Hey there, everyone, and welcome to the latest episode of the Market Misbehavior podcast. I'm your host, Dave Keller, and it's such a pleasure to sit down with top market practitioners, technical analysts, money managers, and anyone else to sort of pick their brain about their processes, their investment approach, what they're seeing, what they're hearing, how they've adapted to changing market conditions, and how they're navigating uncertain waters that we are all trying to navigate as well. Today, I want to share with you a recent conversation I had with Tyler Wood. Tyler is a fellow CMT charter holder. In fact, he's the CEO and executive director of the CMT Association, an organization that I was president of back in the day. Tyler is also the co-founder of GoNoGo Charts, which is a investment research firm that helps investors to understand the trends by using a proprietary set of indicators based on trend-following concepts. My conversation with Tyler was a lot of fun. We talked about the CMT Association, the CMT exams, the rotation from more subjective to more systematic uses of technical analysis in the industry. We talked about his GoNoGo methodology that he and Alex Cole created and applying that to the major market averages. We also looked at the VIX, interest rates, cryptocurrencies, cap-weighted versus equal-weighted indexes, all using that trend-following methodology to give a pretty good overview of market conditions here in early November of 2024. We talked about relative strength investing and the value of looking at sector rotation using a trend-following overlay. We talked about multiple timeframes and used China as a great example of thinking about daily versus weekly versus monthly data and how those different timeframes can help to paint a more comprehensive picture of trend characteristics. We talked about how to find breakouts, looking for initial rallies out of a congestion area, and he shared 3 charts that he thought demonstrated those characteristics today. I had a lot of fun talking with a friend of mine and a knowledgeable market practitioner, Tyler Wood of the CMT Association and GoNoGo Charts. Please enjoy. All right, so today on the Market Misbehavior podcast, sitting down with Tyler Wood. Tyler with GoNoGo Charts, also the CMT Association, and we almost had to delay the start because we were laughing so much talking beforehand. That's how much I enjoy having Tyler, having you on the show today. So welcome, and thanks for coming on the podcast.
Thanks for having me, Dave. It's always good to see you, and yeah, we could laugh all afternoon long.
At some point, I mentioned a minute ago, I'm like, at some point we actually have to record the podcast, but no, listen, it's good to see you. It's good to chat with you. We're recording this on election day, so there's a lot happening. We've got this week alone the elections, which obviously has huge potential impact on the markets. A Fed meeting, earnings wrapping up, and so many other things to think about. But I'm excited to just talk through the process of analyzing trends and evaluating trends, which I think you guys do quite well with GoNoGo Charts. I'd love, before we get to GoNoGo Charts, you have a couple hats that you wear, and one of those is executive director of the CMT Association, an organization that I've been involved with at times and is very important to me, and I appreciate you and so much the role that you've taken on. What's going on with the CMT Association? Give us the quick overview on where that organization is at and where it's headed.
Yeah, we just covered the fact that you served a 9-year sentence on the board of directors, Dave.
A privilege of 9 years on the board, Tyler.
I may have met you with jet black hair. I'm not positive, but CMT Association is thriving. And thanks so much for asking. It's been the most tremendous organization for me to be involved with as well, in the sense that everything that I have learned about how markets work came from CMT Association. So MBA program, all about financial statement analysis and analyzing companies. Got to Wall Street and met Ralph Acampora, as many of us did, and he totally changed the trajectory of my life. And so 14 years later, still involved with CMT Association, and over the summer took over as the CEO and executive director. The organization is I think you actually said this to me, Dave, that there's never been a time where there hasn't been tremendous change in the organization. I think now is very much a part of that, where I think the industry has evolved. The practice of technical analysis has evolved tremendously, but we've got incredibly bright moments on the horizon here. In November, we're going to celebrate the 20th anniversary of FINRA's recognition of the CMT program. The professionalism and the ethics components, as well as the rigor of the body of knowledge, and the examination process was a big part of why FINRA recognized CMT with equal weight to our CFA colleagues back in 2004. And then shifting gears into 2025, we're continuing to host events globally around the world. Our schedule for 2025 is pretty exciting. We'll be in South Florida with our friends in Tampa. Yes, it is still there, and we're going to help spur on the economy with the Technical Analysis Conference in January, out to San Francisco in April, and then back in Dubai in October.
Wow.
So a lot more information coming out from CMT Association. But the big news is that our curriculum will be brand new for 2025. And there's a whole team of folks working night and day in this final sprint to 2025. Really excited about having a bespoke commissioned works for our body of knowledge, not just taken from the great works of other books, but written specifically for the CMT curriculum.
It's that event or that moment you mentioned from 20 years ago, and FINRA approving the CMT designation along with the CFA, sort of putting them on equal footing. What a pivotal moment for the technical analysis community, and it's so cool what has happened with the organization in the 20 years since. And I know you and I both have talked to Ralph Acampora over the years. You could not be prouder of what has happened with the organization. I really love what you and the team are planning for the year to come. And I'm going to be speaking at the event in Tampa, so would strongly encourage everyone to join us.
Now everybody has to come.
And now why not? I would encourage people. Certainly, one of the things I learned, and I think you probably learned as well, is there's so much to be gained from having a community to connect with, of people trying to answer some of the same questions that you're asking. And I found that years ago when I went to my first CMT meeting in New York. And I found that so many times since, and being able to learn from mentors, finding newer people come in and asking new questions. It's such a great and a supportive community in a way that I've not found elsewhere. You actually went through the CMT program relatively recently as well. Yeah. I'm very curious how your awareness or appreciation of the technical toolkit evolved during that process, which is a pretty rigorous set of exams, one that I went through and many others have. What did that CMT experience do for you and your awareness of the markets?
So a couple really important things. I had spent years hanging out with almost nobody but technicians. So I felt like I was fairly aware of what common institutional sell-side research analysts were using, the tools and the concepts. So the first thing that really opened my mind was that the CMT body of knowledge is expansive, meaning there are concepts, tools, theories of markets that aren't part of my daily practice, but which I was exposed to through the CMT program. Things like long-term cycles analysis, things like wave counts, more behavioral finance studies. And then, of course, in the modern era, the CMT program has changed dramatically over the years. There's a lot of statistics and a lot of quantitative methodologies wrapped into the program. So in terms of what I learned when I first got to the association from some of the founding members and understanding some of the history of technical analysis, going from pencil and paper on hand-drawn charts and indicators computed by hand, to where we are now. You can carry thousands of charts around in your pocket and chart anything on your phone. But I think the next phase of implementation, at least for the money managers on the buy side, is much more rigorous in terms of the systematic nature of how all execution is happening, but also even digging into and optimizing what your investment strategy might look like. And so the CMT program prepared me very well, actually, for an event last week, Dave. I moderated a Python for Quant Finance seminar at our local CFA society in New York. I was a little curious why they asked me to do that, considering I have not coded in Python. They said, no, this will be perfect. You'll ask all the questions that our area members are too scared to ask in front of their colleagues. And what really came out of that discussion that rang true for me was all of these expert coders, programmers, Python gurus said, well, you have to already have an idea about financial markets. You have to have a strategy or something that you believe will give you an edge, and then you can test it and optimize it and implement it much more gracefully and accurately and effectively. Yeah. But the coding isn't going to give you an edge on its own. And I think that's where the CMT program is such a vital piece of education for all investment managers, even if at the end of the day, there will be zero discretionary aspects of your fund management. I think understanding how markets work and some of those first principles that John Bollinger highlights for us are really critical.
That it's such a great way to say that. And I mean, in terms of the relationship between models and really how the models are created, right? Because I've always learned, having spent a lot of years with quantitative analysts and people that manage them, you know, it all starts with a question, right? Like, what question are you trying to answer? And then the model helps you answer it, but it has to start with a thoughtful and meaningful question, because a lot of useless models come out of not having a good question in the first place. You're modeling something you don't really need, right? And so having that awareness, and I know it was a very iterative process in my Fidelity days working with the quant team about how you could upgrade and come up with better answers to those questions by thinking of the technical toolkit in different ways we could measure price action and momentum, different ways we could quantify investor behavior. So I'm not surprised. That's a great takeaway, Tyler. And I agree with you. I think the CMT Association, I have confidence, will be at the forefront of that, driving the knowledge forward, and helping, I think, have better equipped people to design better models to quantify investor behavior.
You know, I think those market wizards pointed out that if you're just constantly staring at your P&L for your trading account, you're probably doing it wrong. You should be staring at your rules and your methods, and did you adhere to them? Same thing. If the only thing you care about is the Sortino ratio, then you're not thinking about all the inputs. And the last point I'll make about that was, this is the common ground. I think our fundamental investors and technical investors are coming together in the sense that modeling programs will allow you to look at factors like value and momentum and liquidity all in one go. And that might be the bright future frontier for us to all explore.
Let's get to some charts if we could. I mean, as we talk about the markets, and we have a series of charts that you shared, and thanks so much for sharing it with our audience here. I'd love if we could, just to start, we're looking at the S&P now with the sort of go-no-go methodology displayed. Can you give us the primer for those that are not familiar with, I mean, and to be honest, I think it's a brilliant kind of trend following momentum methodology overlaid on the price action. Talk us through what we're looking at on the chart and just sort of the general way that you assess the conditions here.
Yeah, so I'm a big fan of Daniel Kahneman. Every year I read Thinking Fast and Slow, reread it, I guess. So if we think about system one thinking, particularly this week, right? People are dead set that they know who's going to win the election, or dead set that they know what the Fed's going to do, or what the outcomes will be, even if they're correct about their bet. For system one thinking, it's our quick brain, our fast thinking that helps react to scary things, and there is no shortage of scary things, Dave. We had to turn all news off in our house a couple days ago. So GoNoGo charts came from this idea that technical analysis is incredibly powerful, but what a lot of particularly novice investors or deep fundamental investors that want to look at the technicals but don't have the time to get deeply invested and involved in all of the indicators available to them. This is introducing what could be evidence-based thinking to a system one or a fast thinking kind of a brain, where it's combining, blending into an algorithm a lot of the tried and tested indicators from our discipline, and simply a color-coded chart. So when things are blue and aqua, we're in go conditions. So probabilistic outcomes, it is trending higher when we see those aqua and blue bars or candles. When we're in a no-go trend, right? If you think about launching a shuttle into space, billions of dollars of hardware, you want to make sure all the conditions are in your favor. So it's a no-go for launch if you're a long-only investor when we're in pink or purple candles. And you'll notice there are also some amber bars or candles, typically at points of transition. And Jesse Livermore is very famously quoted as saying there's, in markets, a time to go long, a time to go short, and a time to just go fishing. So we have go fish bars where the market, where all of the indicators in the back end are in their neutral position. It tells you that the market is undecided directionally. So we built some strength and weakness into the trend model. So you've got strong and weak form, strong being blue and purple, weak form being aqua and pink. And that's the basic trend model. And we removed all the indicators from the chart, from the price panel, so that you can get a clear sight line on things like trend, support, and resistance. If you look at Fibonacci extensions and retracements, imagine layering those on top of a chart with 16 different indicators already on it. We believe in the checklist. You should use all the information available to you, but from a really messy chart, you get analysis paralysis, and that's what we're trying to avoid.
I love it. So kind of simplifying rigorous inputs, kind of simplified to one, like sort of a limited number of outputs that have meaning. So talk us through, this is the daily chart of the S&P that we're looking at. So I would assume this means we're still in a primary uptrend, we're still in a go trend, but how would you evaluate the conditions here early November 2024?
So obviously not rip roaring higher these last few days, and we are looking at a daily chart, but the weak form go condition, right? By our rules, we're still in a upward trending environment, and what looks like a pretty healthy consolidation and pullback. Some of the other charts that we'll look at later maybe explain some of the anxiety and the volatility that's coming into the market. But I just drew one support line there. 5650 for us on the S&P 500 is an incredibly important level. We didn't even actually get all the way down there before a bit of a reversal on this latest correction. And Dave, if I could just draw everybody's eye to the bottom panel, for us, after identifying trend, the next step is momentum, and I think it is for almost every technician. Same concept. There are a million different momentum indicators out there, but you don't want 15 different sub panels on your chart. We also incorporated volume and a volatility indicator all into that one panel. So
got it.
For me, the S&P 500 is still in a go trend, but we are seeing a divergence, negative momentum. It broke below this objective zero line for us on the GoNoGo oscillator. That's a really important part of the toolkit where we're seeing momentum either resurge in the direction of a trend or diverge from the underlying trend. Today, that picked up. Momentum's turning positive, approaching zero from negative territory. But we also saw volume lighten up. So when that line goes from the green to the dark blue, as it did right when it broke below the zero line a few days ago, that was heavy relative volume. And we care a lot about relative volume as opposed to absolute factors and looking at histograms. But there was a heavily supported move to the downside at the end of last week.
Interesting. I mean, the use of color and all these different approaches sort of give you a quick snapshot in one place, which I totally appreciate. And what you're seeing with that rotation and with the volume conditions and everything aligns very well with what I've been seeing and talking about as well. And we're in agreement of 5650 is a pretty important level. The next chart's looking at the equal weighted S&P, and I'm very curious what we're seeing here versus the cap weighted and arguably very top heavy regular S&P 500. What's the equal weighted tell us?
So a little further destruction to the trend conditions on an equal weighted view of the S&P 500. Yesterday, I ran all of our scanning and screening, and breadth is very important to us. But we don't just look at new 52-week highs or the ADX line. We look at number of constituents in a go trend versus a no-go trend. So within the S&P 500, 220 stocks are in go conditions of multiple varieties. 240 are in no-go conditions, and we've got 40 securities that yesterday painted an amber bar of neutrality or a go fish condition. So on an equal weighted basis, it certainly looks less pretty than the cap weighted S&P 500 index. We are in a weak form no-go trend. We also have that negative momentum, but turning positive. So we're at a negative 3 today. Back to approaching the zero line. What's important to me in simplified charting is that you can also spot what was resistance and then became support is still holding as support on the RSP. And that equal weight, I think, is maybe the most important chart for all of us to be looking at. I think in times of tremendous volatility, anxiety, potential regime shift, potential change of personnel in the Oval Office, we could see tremendous changes in the underlying makeup of the stocks and securities that are in our leadership groups. So if there is a turning point, it doesn't necessarily mean that it's the end of the bull market, but it could be a time of quite a bit of change. And we'll get to a few individual names towards the end.
It's well said, and it's been a theme now on the Market Misbehavior podcast. Mark Newton, I know with Ari Wald, with a number of people, we talked about equal weighted versus cap weighted indexes and the benefits of really considering both of them in terms of evaluating the conditions. I think that's very well said. The volatility becoming more and more elevated here in recent months. The VIX has pushed above 20 and now kind of teasing that level. What did the elevated volatility conditions tell you, and what's your sense of volatility going forward?
So I think it was Mark Newton. I track a lot of CMTs on social media. It's pretty much all that's in my feed.
I'm sure you're contractually required to do so, but okay, go ahead.
There's no time for cat humor. It's all charts all the time. So I think it was Mark, and I apologize if I'm misquoting you, talking about peak uncertainty. And so the run up to this presidential election has really taken a toll on everybody. No matter what side of the aisle you're on, you have been hearing about it, arguing about it. Hopefully that is coming to an end. And you mentioned, peak uncertainty being basically today. We'll have the election. I'm not predicting that we're going to know who's going to sit in the Oval Office by 9 o'clock tonight. That could take a little while longer.
Right.
So using the GoNoGo methodology, we are in a go trend. It's a weak form. We did see VIX, and I think it was Todd Sohn saying, when it gets to legal drinking age, that's when I get a little shaky. 21 on the VIX. Then there's nothing but bad things that happen afterwards. Yeah. And what we're seeing today is perhaps a little quieting of that. The GoNoGo oscillator dropped back to the zero line. We're at neutral momentum, and so it's elevated. But when I look at this, it's been relatively stable through this particularly anxious period of October. We did see the first rate cut mid-September. We're seeing more action happening in the bond market, and we've got a couple charts to look at there. But nothing to me suggests that this is a runaway breakout to heightened volatility or to something really dramatic to come. Now, should the election still be undecided? Should the Fed do something quite crazy tomorrow, diverge from the expected 25 basis point cut? We'll see that show up in the VIX for sure. But right now, to me, this looks relatively stable.
It's interesting. I mean, in some ways, it's almost surprising the VIX hasn't been much higher, I guess, in a lot of ways, right? Given talk about an uncertain week. Certain things like the Fed, sort of a foregone conclusion in a lot of ways of an additional rate cut. But with the election, talk about uncertainty. I feel like this is the week. So the VIX only at 20 or so is actually pretty decent.
That's how I see it. And actually, on that note, when we saw that spike above 60, it was the unwind of the carry trade. Aussie yen moved dramatically. That came out of nowhere. And so I think Bill Kelleher always tells me, you never get hit by the train you saw coming. It's not like anybody in the world doesn't know that the Americans are electing our next president today.
Right.
It's been well telegraphed.
Right. Every day we've been hearing about this for too long, I would argue.
Exactly.
All right. Let's talk quickly about a couple other markets. And you had some really interesting ideas I want to make sure we get to at the end of the bundle here. Just talk quickly about rates, because rates obviously have changed quite a bit. Going through the end of September, it felt like a falling rate environment was the story. And now the 10-year yield has gone back above 4%. What's your sense now about rates in November?
So in a go trend, momentum's positive and holding there. We haven't even come back to retest the zero line. When asked on social media, Jim Bianco said, the Fed cut rates and the market doesn't agree. And so we're seeing the long end, long duration bonds, rates are moving much higher as the Fed can control the short end of the curve. For me, the 10-year is in a go trend. This is just a daily view, and we can look at a much longer term to see that this is also relatively stable. We're not seeing a massive breakout, runaway inflation, but it is fascinating that the Fed will cut rates mid-September and again tomorrow, and we've seen the absolute opposite reaction from the long end of the curve.
Yeah, thanks for mentioning that Jim Bianco comment, because I agree. I've had a number of questions on, I thought the Fed was cutting rates. Why are rates going up? And I feel like we're grouping all rates as one kind of thing. It's actually a whole curve with different durations and everything. And
Yeah.
and you're right. Now there's a bit of a disagreement, right? And
Yep.
arguably some optimism with rates kind of trending higher. So I'm going to 1-2 skip a bit, because I want to talk about Bitcoin if we could, because this is an interesting area. And I'm very curious, given that Bitcoin is kind of testing all-time highs, what we're seeing here. And then I'd love to go through a couple of the ideas if we could to finish off. Is that all right?
Absolutely. Absolutely.
So Bitcoin, obviously, I mean, we've been watching Bitcoin, sort of recover back up to that 72,000 level a couple times, but unable to kind of follow through. What's your toolkit tell you about the trends now?
So I updated this again for today. So this is midday on election day, November 5th. Strong candle to the upside, bouncing off of support at what was resistance back in July. I think the go trend is there. And if you draw your eye to the lower panel, the momentum oscillator is riding the zero line. So when you think about investor behavior, a tug of war between buyers and sellers doesn't mean that there isn't a lot of trading activity happening, but there's no decisive owner, right? Like the buyers have not dominated, the sellers have not dominated either. When that happens, when you have a volatility compression like that, you tend to await a volatility breakout or expansion. Andrew Thrasher wrote a great paper on the volatility tsunami several years ago. But the idea of compressed volatility comes expanding volatility is what builds that little orange grid in our GoNoGo oscillator. So when the momentum becomes stagnant and you see price action start to narrow in its range of activity, that's where you're going to have a decision point. Now, to me, all else being equal, it's in a go trend. We're finding support at what was prior resistance. My guess is that resolves to the upside. But from a trading perspective, you've got really great risk reward. You're wrong below 70,000, right? We break that support line. And if you're right, and from all of this coiling, all this pressure on Bitcoin, if it moves to the upside, then I think, we'll be looking for a high velocity move in that direction.
That's one of them. This is one of those that's been basing for so long that if and when it finally resolves to the upside, our mutual friend Adrian Zadunchik, I'm sure, will be broadcasting that loudly.
I'll be watching everything CryptoBird puts out.
So quickly, I lied. I do want to look at this one because I know this is a heat map you have based on the relative performance of sectors, and we often sort of speak the praises of the values of relative strength, thinking about what's working relative to other things. Can you just summarize what is this heat map telling us about offense, defense, risk on, risk off conditions here in early November?
So the way I was taught, you take a top-down approach, right? The fundamentals look bottom-up. We're taking top-down, so thinking about rates, thinking about commodities, what's the landscape across the assets. Then you get into equities, and you got to get under the hood and find out where the leadership groups are. So what this chart is showing us is the ratio of each of the 11 sector spider ETFs to the S&P 500. And as a ratio chart, doesn't mean they're in absolute uptrends or downtrends, but relative to the broader market, it's pointing out what's leading and what is lagging. So throughout the summer, we saw that rotation into all of the cyclical sectors. We saw financials, energy, industrials, healthcare, staples, even some of the defensives like staples, utility, really outperforming the market. The character of our markets has been sloppy, choppy, messy over the last couple of months, as I think a lot of investors are trying to figure out what is going to work. Where are we headed? And I think that a lot of that uncertainty shows up on a heat map like this or a market carpet where you've got a lot of movement, a lot of quick rotations. Things are working or outperforming the S&P for a week or two and then changing direction. What I'm seeing right now from the top-down perspective, we actually saw today the XLK underperforming. So it left that go trend of relative outperformance It's still intraday, so we'll wait for the close to lock in all of those colors. But right now, it's painting a pink bar. What is leading and outperforming in a strong go condition is the communication sector. And I'm a human being just like the rest of us. It's great to be data driven, but I also really like to have a story that explains it. It helps my small little human mind understand things. In the run up to the election, advertising, media companies, television watching, like, of course, that is where a ton of money has been funneled into the market.
Sure.
And so the XLC is our strongest outperformer. Also seeing great moves in financials, particularly specialty finance, the broker dealers, some insurance, and then funds within the financial sector, all looking really, really good.
Interesting. And so this is using the same color coding that we saw in the earlier charts, but just summarizing it in one table, which I think is great.
Take out the price action and just consider the trend.
And just focus on the relative trends. Big fan. All right, we have time for like an idea or two. You have some charts at the end. Which would you like to share?
Let's rattle through China because this will take me 2 seconds. Everybody got so excited. This is the daily chart of the iShares China ETF. Big move, right? It's faded pretty sharply. Move on. Let's take a look at it on the weekly. Okay. Also faded and below what was prior resistance. Now let's jump out to the monthly. Time frame matters, folks. The trend, if you're looking at this on a monthly basis, or if you think about things like the 3-year return from China, still negative. So that really exciting move that everybody was talking about, it's an awesome trading vehicle, but this is a high beta play. And so exposure to China should come with that kind of risk management mindset, perhaps a shorter time period. As a long-term investment strategy, I'm just not seeing it yet. China's still got a lot of work to do.
This is such a great example here to go through, and I'm glad you sort of hit on this kind of multiple time frame analysis. I mean, broader in your work as you're looking through each of these, how do you think about those different time frames, and what kind of defines your primary lens with which you're describing one of these trends?
For me, it's daily, weekly, monthly. Weekly is really my sweet spot. I'm a terrible trader, Dave.
You have to know yourself, right? Know your strengths and your weaknesses. That's great.
I did not take a Coursera or Udemy course. I instead paid fortunes to Mr. Market to learn
That's your tuition, right?
Yeah, that was my tuition. So I know my lane and I stick to it, which is pretty vanilla stuff and pretty long time frames. But the way GoNoGo charts are calculated, it's the same everywhere. And the last few individual names that I was going to mention, and I think you actually talked about some of these. We're seeing Home Depot pulling back to an area of support. We're seeing Freeport McMoran that's been just rattling around this line forever. I think that's a bellwether for the economy. If we are doing well, that's going to hold support and continue moving. Check out the next one. Yeah, I'm never going to be a bottom fisher, Dave. I do not catch falling knives, as you have heard the joke many times. However, at times of great anxiety and big change, you can start to see things shift around. So Twilio, Peloton, these are big bases that are now starting to break out. And the important word there is they are starting to break out. So you've got an important level that you can trade against, good risk reward. And we're in strong go trends with an overbought in momentum, which can be very positive in the early days of a fresh move. Right. So I think there's a tremendous amount of opportunity. I think as trend followers, we're taught to buy high and sell higher. You want to see things that are trending, but it doesn't hurt to get in early on trends like this.
Well, and all big gainers, they often start as small gainers, right? You have that initial rotation. I mean, to wrap up, Tyler, I think that's what I really appreciate about the methodology that you and Alex Cole have put together is that it really helps to, in a fairly systematic, more objective way, recognize when a chart like a Twilio or a Peloton, one of those, have obviously been underperforming for so long, but then conditions start to change, and hopefully you can capture those early on. This was a lot of fun, Tyler. I really appreciate it. Good macro thoughts, good micro thoughts, kind of everything in between, but a little sort of mini masterclass on trend following and momentum that was well done. Where can we point people to find out more about you and the work you and Alex are doing at GoNoGo Charts?
Absolutely. So every social media handle you could imagine is at GoNoGo Charts, and the website, GoNoGoCharts.com. We've got a ton of educational material explaining all the indicators, not just what's in our algorithms, but also the underlying indicators that were blended in there, and why we are such strong believers in the great work of technical masters from the last 4 or 5 decades.
This was awesome, Tyler. Listen, I hope we can do this again, but I really appreciate you coming on the podcast. We've had a really good run of some smart CMTs. I would include you on that list as well.
Thank you very much.
Thanks for broadening the horizons of our audience today. I appreciate it.
Absolutely. I'll see you real soon. You take care.
What a fun discussion with Tyler Wood of GoNoGo Charts and the CMT Association. And again, I'm speaking at the event with the CMT Association, the Midwinter Retreat coming up in January in Tampa. I hope you can join me there if you're so interested. I thought Tyler's comments about just the general approach of trend following, more systematic methods of doing so, and then applying that lens to different markets, I thought was really well described and well documented. Whether or not you use that specific GoNoGo methodology, I think it's a brilliant illustration of the value of combining different trend and momentum measurements into one aggregate evaluation, one aggregate score to make sense of different charts. And I thought some of the examples we went through really helped to illustrate the value of multiple time frames, differentiating short-term noise from medium-term and long-term reversals, and different ways, help me think about different ways to try to quantify those rotations. If this sort of thinking about trend following, momentum analysis, investor psychology, behavioral finance, and all of the above is of interest to you, my free behavioral investing course may be a really good next step for you to improve your own decision-making and upgrade your own market awareness. You can go to marketmisbehavior.com/free course to check it out, and I hope you will do so very soon. For Market Misbehavior, I'm Dave Keller. Thanks so much for joining me for this Market Misbehavior podcast series. If you have suggestions on who else we should sit down with, I would love to hear it. Drop a comment wherever you're listening to this, and I'll look forward to hearing your suggestions. For Market Misbehavior, I'm Dave Keller. Remember, it is always a good time to own good charts.